Subscribe to our channel to get updated with our new videos. Hello, good morning, good afternoon, good evening, depending on what part of the world you are. This is Crypto Doctor, and I wish to take us through by dissecting cryptocurrencies. So, to start off with, I would like us to go through what cryptocurrencies are, especially for beginners into the crypto space who want to know what cryptocurrencies are. They want to invest in cryptocurrencies, or they want to use them as a medium of exchange or payment for any platform. So the contents for today are going to include: one, what is cryptocurrency, Bitcoin as the first cryptocurrency, blockchain technology, its uses and application in cryptocurrencies, and then the properties of cryptocurrencies. So let's start with what is cryptocurrency. Basically, a cryptocurrency is just a digital asset, or you can call it a digital currency. So dissecting further, I want to know what cryptocurrencies are. So cryptocurrencies are actually an internet-based medium of exchange which uses a cryptographical functions to conduct financial transactions. So normally, with the advent of life and the growth in development, man started from exchanging goods for goods or goods for services, and then time went on and things started to have value. Things like gold, precious stones, foodstuffs that were very non-perishable to some extent, were now used as a medium of exchange. And then with more development, we came to find, the goldsmiths started issuing paper, to kind of represent the gold you have in store, and that was how paper money came in. So now the world is going digital, and then digital currencies started developing. So cryptocurrencies and blockchain. Cryptocurrencies actually leverage on blockchain technology to give them the characteristics properties of being decentralized, transparent, and immutable, making them also, you know not owning to only one central authority. So no particular person can claim having the whole Bitcoin, or can control the supply of Bitcoin in the whole world, not even Satoshi himself. How do cryptocurrencies work? Normally, cryptocurrencies just work by a simple confirmation on the blockchain. Now, in as much as there is no confirmation on the blockchain, no transaction in the cryptocurrency world can actually be done. So what is cryptocurrencies mining? Now, cryptocurrency being decentralized, that means nobody has control over it. There is a need for a way to kind of confirm transactions when they are being done. And this is what is being done by miners. They get rewards for confirming the transactions being done on a blockchain, and then the network fees that you pay when doing a transaction is what goes to the miner in form of any form of cryptocurrency. Now, majorly the job of miners is to confirm the transactions by dedicating their own resources. They have to dedicate computers, they have to dedicate electricity and so on, to solve complex mathematical functions on the blockchain. Now, that mathematical functions they do solve is what confirms the transactions made on a blockchain, and this is why it is irreversible. You cannot go back to change what have been done on the previous block, in as much as the block has already been mined. Now, the next thing we want to talk about is Bitcoin. What is Bitcoin? So, in summary, in a very short summary, Bitcoin was the first cryptocurrency that was launched in 2009, and it was created by an anonymous inventor, Satoshi Nakamoto. Now, Satoshi called Bitcoin as a peer-to-peer electronic cash system. You know, Bitcoin was created as a form of exchange between peer groups, and it was created to make transactions easy. For example, you can send Bitcoin to a brother who is in another part of the world. For example, I'm in Nigeria and I want to send cryptocurrencies to my relative who is in the United States. Now, instead of going through the normal traditional banking system where I have to send money via international bank transfer, and then it might take days. They'll tell you the minimum days is 3, the maximum is 21 working days before the money can be sent to someone who is in the United States via international bank transfer. Now, if I'm using cryptocurrencies with just a simple block confirmation, which would only last few minutes to just a couple of hours, my cryptocurrency would have been sent to my brother in the United States. So, what do you think? Would you buy and keep Bitcoin? Do you think it is valuable to keep it over the long time? Do you think your funds are safer in cryptocurrencies than when you store them in the bank, being them decentralized and immutable? So, well, let's look at blockchain first and see if we can explain the few questions we had earlier. So, what is blockchain? Basically, blockchain is can be defined as a simple, distributed, and decentralized public ledger. Now, what this literally means is that blockchain is just like a block that stores data and then it is connected to another block by a chain. So how is this done? Basically, a block in a blockchain has three digital pieces of information. The first is the transaction details. What I mean by the transaction details is the date of the transaction, the time of the transaction, and the value of the asset in that transaction. Now, the second thing is the participants in the transaction. Now, these participants are usually very anonymous, and you could only identify the participants by either their username or their wallet address. And then the last thing is the unique code that each block has. That code is called the hash. Now, this hash is what distinguishes block 1 and block 2, and this is what is more or less like the link between one or more blocks. How does blockchain works? Basically, for a transaction, for a block to be mined, the transaction first must occur. Now, I must have decided to send Bitcoin to my brother in the US, and then two, the transaction must be verified. That is, the miners who have dedicated their resources to mine Bitcoin must have verified that I have sent Bitcoin to my brother in the United States. And then the third thing is the transaction must be stored on that block. I cannot make a transaction on block 1 and then it will be mined on block 2. That's not possible. That's not possible. You can only make a transaction on a particular block and it has to be verified there on the block. And then the last thing is the block must have that particular hash, that unique code that distinguishes it from other blocks. Basically and simply, this is how the blockchain works. There are more complex blockchains. Now, what are other uses of blockchain technology that we want to look at? Now, one is smart contracts. For people who have been into the crypto space for a very long time will tell you that Ethereum has stolen or has taken over the world of cryptocurrencies with decentralized finance, and basically this is because of smart contracts that are available on that blockchain, which the blockchain of Bitcoin does not offer. The second thing is record keeping. Example is you can keep healthcare records or property records on a blockchain. 3 is electronic voting. Now, because of the transparency of the blockchain and it being decentralized, it can be leveraged, for an e-voting system where there would be minimal risk to manipulations and rigging. And then the last thing is supply chain. But there could be other uses of blockchain technology. So you just do your own research, check the web, ask questions, and you could get to know other uses that we can put blockchain into. So what are the properties of cryptocurrency? Anybody that knows cryptocurrency will just tell you crypto is decentralized. But let's look at other properties. Now, the general properties of cryptocurrencies are: one, irreversible. In as much as I've made a transaction, I've sent crypto to my brother, it cannot be reversed once it is confirmed. It cannot be reversed, so it is irreversible. Two is pseudonymous. I can decide to hide my identity by using an anonymous name, a username, or a wallet address. Now, this is the only thing that identifies the participants in the transaction on a blockchain. So this is what makes it pseudonymous. And then the third thing is it is fast and global. You can send your cryptocurrencies anywhere in the world in a matter of seconds, depending on the blockchain you are working on, or to some hours. Hardly do you cross over a couple of hours to 3 hours to confirm a transaction on a blockchain, no matter how sloppy the market is. And you can also use blockchain all through the week. You cannot go to the to Bitcoin blockchain and then it will tell you today is Sunday, there isn't work. No, that is not how it is being done. And then another property, the fourth, is secure. It is very, very secure because, as opposed to fiat currencies, Bitcoin or cryptocurrency is the bearer and not debt. So your funds are also very secure with your uh, private key, which is on the blockchain. No one can access your funds without you giving them the permission to. The fifth is permissionless. You don't need any permission from anybody or any authority whatsoever to have your own crypto wallet. It is easy to use with just your mobile phone. Just like I'm recording this video on my mobile phone, I don't need a computer, I don't need anything. With a simple mobile phone, I can create my own wallet address to buy my cryptocurrency. And then decentralization, which is the most important and the thing people emphasize on, is that it is decentralized. No particular authority rules over cryptocurrency. Not even Satoshi can control the amount of Bitcoin in circulation. Now, what are the monetary properties of Bitcoin? Now, controlled supply is the first thing. Some cryptocurrencies have a limited supply, and this is why they can't exceed a certain amount in circulation. So, for example, Bitcoin cannot exceed the supply of 21 million BTC, but other cryptocurrencies don't have this controlled supply. I mean, this is the characteristic property that makes them more decentralized than Bitcoin is. For example, Ethereum. Now, the second thing is it is no debt, rather it is the bearer. So, for example, if I have Naira in my bank account, it is created by debts and therefore represent the debts of Nigeria, while cryptocurrencies themselves are more or less, you own them, they represent what they are. And this is why cryptocurrencies are, are actually called assets, because if I own a house, I own the house. If I own a car, I own my car. So just like if I own my Bitcoin, I own my Bitcoin. But when I own Naira, it is Nigeria that owns Naira. If I own dollar, it is owned by the government of the United States and its central bank. So this is briefly an introduction to what cryptocurrencies are. This is a lecture series, and I would want us to continue to have more videos where we talk about cryptocurrencies, and I would like anyone to at any point in time correct me and actually help me in making things better for my viewers. Now, in conclusion, having dissected through cryptocurrencies, at least we can look at what we went through and see in summary. Now, cryptocurrencies are a digital form of exchange or assets that are valued by investors. So it depends on the investor. We have many investors in cryptocurrencies, just we have investors in the stocks market or the forex market. And then cryptocurrencies leverage on blockchain for their decentralization and immutability. And Bitcoin was the first cryptocurrency created in 2009, and it is a form of a peer-to-peer electronic cash system, as Satoshi has called it. Blockchain ensures the security of cryptocurrencies and could be used for many other things that we've seen in the lecture. Miners confirm transactions on the blockchain. So without miners confirming transactions on the blockchain, a block cannot be mined and the transaction cannot be completed. And then each block on the blockchain contains the information as follows: the transaction details, the participants, and then the unique hash. So with this, we come to the end of today's video, and I hope you liked it. And if you do, just subscribe to our channel